Welcome to the November 6, 2017 Advance Report from McGowanGroup Asset Management clients. We're so glad you joined us today. We have been doing some deep research, highly significant for 2018. Last week, if you haven't seen that video, I do want you to go back and look at it because we explored the earnings of the S&P with great detail. This rally, look at this, 57%. Facebook, Amazon, Apple, Netflix, and Google up 57% as a group. That's a new index. It's called the FANG trade, and it's powering the market. As a matter of fact, it accounts for about 75%. Technology accounts for 75% of last month's extraordinary performance in the S&P 500. But underlying this, why would the market rally 30% from the election? Well, if you take the last earnings report for the S&P 500, $40 after tax, annualize it, that's a quarterly number, $160. Guess what that number was just a year ago? About 105 trailing 12 months. That's extraordinary. Now, if you put tax cuts on top of it, this week's tax cut proposal said we're going to go from 35% to 20% back into what that does to the earnings. You could get $210 per S&P unit on what was just 105 last year. It's the most extraordinary bounce in after-tax earnings that I've witnessed in my 30-year career. Now we move to a trap. Now, GE and AT&T, great blue chip names. You hold them in the portfolio. They've got a dividend. So this is without the dividend, the price performance all the way back 20 years. And look at this. They just pounded on GE and AT&T all week long. Money, of course, rotating to the hot, thin market for the FANG trade. But look at this. GE falling below $20, really for the first time since 2011. That was a sad story, and a lot of people taking tax losses. You could see after 20 years or 17 years from that high, a lot of people starting to give up. AT&T as well. $33.17. It reached a 52-week low. These are traps. And we do have a special report in this weekend's long play program at NetWorthRadio.com. We actually cover the performance report that we give to clients. And there's a special section, second from the end, called Performance by Security that helps not to hold something that's doing damage to the portfolio for too long. And, of course, it helps you schedule harvest, too. Texas banks. Remember 1990, virtually all of the Texas banks were on the ropes and very few survived. But look at the survivors here. Comerica moved from Detroit. Good move, Comerica, by the way, Dallas-based. Hitting nearly $80 a share this week. That's an all-time high for Comerica. Congratulations. Now we look at Cullen Frost Bankers. Wow, Frost Bank is just killing it, approaching $100 a share. And look at that steady timeline. Texas banking on top. The sad story of Citigroup is on top. That is between $500 and $600 a share as their peak. And I'm so sad that Prince Alwaleed, the Saudi prince, hasn't done very well because I believe he was one of the largest advocates of Citigroup in his portfolio back there. Now it's just $75, about 15% of its former self. I vote Texas. Now, Bitcoin, just for fun, okay? Digital beanie babies, cryptocurrency. This is not something that we do, and it is something that we missed. Notice you could have bought it at 1,000 back in 2015. Bam, about 7,300 to 7,400, actually 7,449 at the peak here this week. This is an absolute mania. $100 billion has flown into Bitcoin. Wow. Well, this weekend's long play program, we're going to cover artificial intelligence and the likely outcome from data mining and what happens to Bitcoin. Buyer beware. I'm Spencer McGowan, President, McGowanGroup Asset Management. Thank you for tuning in, and be sure to catch last week's report where we go more in depth on those earnings with some special charts as well. We'll be back next week. Like us on YouTube. And this could be the best 5 minutes in finance each and every week. YouTube, McGowan Group.